First, thanks for inviting me to this OIDO dissemination conference. Let's get the title of the paper. So what I'm now going to present is an update of the paper I've uploaded. An update because the original paper was from 1999 to 2010. We are in the middle of a deep recession. We are in the middle of the crisis. So I could not just present the results till 2010. I present the results till spring 2012. The paper is about whether the financial crisis, the crisis per se, because the financial crisis culminated into the Eurozone crisis, has had an impact on trust in national government, national parliament, European Commission, European Parliament. The structure of the presentation is as follows: a short introduction, theoretical links. I will point briefly model specification, research design and data, and then I will put the main emphasis on the descriptive statistics and some econometric results of this updated paper, conclusions and policy conclusions. The bankruptcy of Lehman Brothers in 2008, it started as the starting point of the most severe financial and economic crisis since the Great Depression in 1930. From 2010 onwards, this financial crisis culminated into a sovereign debt crisis, the so-called Eurozone crisis. The policies to stimulate confidence at the financial markets were austerity measures. Among Booty and Padua in 2012, they have some arguments for that. And here in particular in the periphery of the European area. And among others, these austerity measures have led to further deterioration of economic performance in the periphery and to a significant increase in unemployment. And so this paper's focus is on the economic determinants, and I say economic, and I follow a paper by Stevenson and Wolferson, Stevenson and Wolfers from American Economic Review in 2011, which also focus on economic determinants, and this paper, the updated one, is strongly going to focus on unemployment. So what's the impact of an increase in unemployment on these four trust items? What's the theoretical link? The consequences of citizens' declining trust in national and European governmental institutions. Why should we care? So this is a mix from sociology literature and political science literature. In the paper, I do elaborate first on systemic trust, link that to the sociological literature because that's where I feel more comfortable in. But the political science literature obviously adds a lot of good arguments. Political science argue, Kaltenthaler et al., that sufficient trust is crucial for the legitimacy of a policy-making institutions. In the absence of trust, this legitimacy of the policy-making institutions is endangered. They continue to make a point that without sufficient trust, citizens might commence to undermine the authority of the policy-making institution. And Giddens actually stresses that this might ultimately lead to an abolition or a break apart of the institutional framework. A political scientist, Nye, he puts in three pragmatic consequences of declining trust. Without sufficient trust, citizens will try to hold back tax money, first. Young, talented graduates will not be willing to work for the governmental institutions, second. And thirdly, the overall compliance with law will decrease. Which levels of trust would be worrisome? Kaltenthaler stressed that it would be worrisome for policy-making institutions once large numbers of citizens start to distrust it. And more important for the findings I will show is something Newton has stated in 2001, as well, a political scientist. He says, and he points towards trust in national parliaments, but we can take that as an abrupt or steady decline of trust from the long-term trends should be regarded as worrying. So if there's a steady decline of trust in the national parliament or in trust in policy-making institutions, we should be worried. What are the driving factors of national and European government institutions? There is one paper by Stevenson and Wolfers, American Economic Review. They point the key determinant for driving for trust is unemployment. That's what they point out in their paper. The paper on popularity functions, they point out growth, unemployment, and inflation. The literature on trust in the government points out economic growth and unemployment. A paper, a short comment by Roth, points out that a fast increase of debt per GDP when banks were bailed out, led to a deterioration of citizens' trust, as in the case of Ireland in 2010. The Irish government bailed out 2 private banks. The debt of GDP increased by 50 or more %. There was a huge trust crisis after that. So the model, the left-hand side, the dependent variable is net trust in the national and European governmental institutions. We've got inflation, growth, unemployment, and debt control variables. And I'm only going to show, as you will see in the next slides, the coefficient of unemployment, because this is what this updated paper will be interested in. The research design, okay, on the left-hand side, the dependent variable are the 4 trust items. The time series is 1999 to 2012, and the reason for this is that Eurobarometer has started in 1999 to collect the data. So this is the longest time period we can analyze, from 1999 to 2012. The analysis is, as the coefficients are estimated via fixed effects DFGLS estimation. We have found a structural break, so I will show pre-crisis, crisis, and full sample results. The data for GDP, population, unemployment, inflation, and debt over GDP, they were taken from Eurostat, quarterly statistics, and the trust items from the Eurobarometer. And the matching was as such that the macroeconomic determinants, they are front-loaded in front of trust.
You mean temporarily?
Temporarily in that sense, front-loaded that we've got unemployment over 6 months from October to March, and we've got the Eurobarometer in April. Okay, now let's start. This is important to point out, and I will stress most, and I will stand up and I will speak loudly so that you can still kind of understand. So we've got the black trend is trust in the European Commission. In the EU 15, we start from 1999 till 2012. The dotted line is Lehman Brothers. This more light trend is trust in the national government in the EU 15 and the dotted in the EU 27. First thing we see that the EU 27 is quite clearly linked to the EU 15. These are population-weighted trends in that sense that the 370 million citizens with 15 already lead the trend. What can we see? This is the dotted line. We see that there is a, I would say, significant, there is a clear decline in net trust in the European Commission. There is a decline in the EU 15 in the national government, but not so pronounced. What we also have to know about this chart, if you look at it, if you look at the 0, this is net trust. Net trust means trust minus mistrust. Everything which is above the 0 line means that a majority of citizens trusts. And everything which is below 0, a majority of citizens already mistrusts. So interestingly, the trust in the European Commission is far higher than in the national government. That's very important to point out. And actually, the trust in the national government in the EU 15 has always been below 0, or mostly. So there has always been more mistrust than trust in the national government, if you look at these population average trends. And interestingly, in the European Commission, it hits the 0 line in spring 2011 for the first time. A majority of citizens mistrust the European Commission. A similar picture can be seen if we compare national parliament, European Parliament. The decline in the European Parliament is more pronounced than in the European Commission from the dotted line from Lehman Brothers, and there is also more pronounced in the national parliament. But up to now, and these are now the figures, I mean, not so strong. I mean, we see that in the European area 12, the decline, and this is spring 2012 minus spring 2008. So the right-hand column here is the change. That's what we're interested in. Let's think about Newton. If there's a steady decline. So this is the change, and we see that in the European area 12, European area 15, European area 17, this change to minus 30 net trust. And it's less pronounced in the national parliament with minus 9 and minus 15 in the euro area. We see that in the euro area and EU 15, there's not much change. It's quite the same, because if you look at Denmark, Sweden, and UK, these things nivellate. So what we are now going to do, because we think that there's a Eurozone crisis and there is a core and a periphery, we're going to look at the disaggregated data. So what's behind this minus 9% decline in the European area 12 and the minus 15 in the national parliament? What's behind the minus 32 and the minus 34? Are there differences within the single European area 12 countries? And once we look at the disaggregated countries, what we see, if you start here, we see that in Spain there is a decline of minus 90 in the national government and a decline of minus 91 in the national parliament from spring 2008 to spring 2012. It declined from 20% in spring 2008 in the national parliament to minus 71% in 2012. So what does this mean, minus 71% in Spain? In Spain, in spring 2012, 11% of the citizens still trusted the national parliament. 82 already mistrusted the national parliament. A similar severe decline we can see in Greece, minus 72% of net trust in the national parliament. It has decreased from minus 2 to minus 74. In Greece, in spring 2012, still 12% trust the national parliament. A less severe decline we see in Italy. It's only minus 19 because it has been very, very low before. But in Italy, with minus 76 net trust in the national parliament in spring 2012, we have hit a new, according to this data from 1999 to 2012, a new historical record. In the EU 15, in Italy, still 8% of citizens trust the national parliament, which is every 12th. So what happens in the core, Germany and France, and what happens in the core? In Germany and France, the trust in the national parliament government has actually increased significantly. And if we look at the European Area 8 then, all countries in the European Area 12, without Spain, Greece, Portugal, Ireland, we can see that in the European Area 8, trust in the national government parliament has actually increased. But in the European Area 4, there is a significant and quite strong, pronounced decline in trust in the national government, national parliament. The same pronounced decline in the we can see with the European Commission and European Parliament, minus 74, minus 66. But we also see that there is a decline in the European Area 8, not so strong and pronounced as in the European Area 4. So this is the picture once we have a look at the trends in the European Area 4. Both trust in the national government, Parliament, European Commission, Parliament, European Parliament, they are all steady. There's not too much variance up to the crisis. And then we can see a steady decline, which is strongly driven by Spain because this is, again, population averaged trends. And this reaches minus 70 in the national government, national parliament now in spring 2012. A steady decline, it was above zero. A majority of citizens in Spain trusted the government, 54% still trusted the national parliament before the crisis, and now it's still 11% in spring 2012. Now we look at the European Area 8 countries, Germany, France, and the other 6. There is a decline in European Commission, European Parliament. It is there. There is no decline, there's an increase as we saw within the national parliament, national government, and actually there is nothing happening on the long-term trend. It's within the long-term trend. So we cannot really talk about a trust crisis going on in the European Area 8, but there is a trust crisis going on in the European Area 4. So now the big question is, once we analyze this with econometric estimations, what's the driver of this decline in the European Area 4? And so I've highlighted that in yellow. That is trust in the national government on the left-hand side, minus 8.1%. That's the impact of unemployment on net trust. How do we have to interpret this result? An increase of unemployment of 1% from 12% to 13%, for instance, in Spain, will decrease net trust in the national government by 8.1%. In the national parliament, the coefficient is minus 7.3. An increase of 1% of unemployment in Spain, in Greece, in Ireland, in Portugal has affected national trust in the national net trust in the national parliament by 7.3%, a decline. This is less pronounced with European Commission, European Parliament. There, the decrease is minus 2.6% and minus 3.1%. So an increase of unemployment of 1% in Spain has decreased net trust in the European Commission by 2.6%. Do these results fit into the previous empirical results? Yes, they do. The American Economic Review article has clearly stated that unemployment is a very important driver for declining systemic trust. Popularity function, they highlight unemployment and also trust in the ECB literature. So what are the conclusions? In the European Area 12, Spain, Greece, Portugal, Ireland, they face a steady downturn of citizens' systemic trust. Strongest downturn can be observed in Spain and Greece. The harsh decline of trust in the national parliaments in Spain and Greece should be the most worrying for policymakers. It threatens the legitimacy of these institutions and risks, according to theory, an institutional break apart. This threatens political stability and democratic structure in Spain and Greece. It is particularly serious for these two countries because they are young democracies. We have maybe yet not seen the upcoming radicalization of party structure. Supposedly we will see it. Once it would come, it would be rather national than EU interests. This significant decline we observe in trust in the national parliament and government in the European Area 12 periphery is strongly driven by a steady increase in unemployment. This holds for the EC and EP, but to a weaker extent. The unemployment levels of 25%, we are talking about an increase of 17% from before the crisis to now, of 17% in Spain and 24%, and an increase of 16% in Greece. They are politically and socially unsustainable. So what are the policy conclusions? We should follow Krugman and state the depression in the Eurozone, here in particular in the Eurozone's periphery, has to be ended now. The unemployment rates in Spain and Greece, Portugal and Ireland, they have to be reduced ASAP. That's what I now state. I mean, this is my personal opinion. I mean, I may be affiliated with CEPS, but I now have to say my personal opinion, and this short-term policy is also my personal opinion. So what do we need? We need an immediate relaxation of counterproductive austerity measures in the periphery countries. Those austerity measures, if they tackle structural reforms, such as corruption, product labor market barriers to entry, or stronger governance, they have to be accompanied by growth-enhancing investments into, for instance, intangible capital, education, innovation, government efficiency. We should think about the Marshall Plan for investments into the European area periphery, potentially financed by the EIB, or in EU tax, as Ian Beck has pointed out in one of his recent papers. Look what the EU structural funds, how much money is there? How can we spend it? We need a relaxation of the SGP, the new six-pack criteria, fiscal union, because we have to allow government spending in times of shattered confidence and in times of a liquidity trap. If the government doesn't spend, entrepreneurs won't, and the households also. So we need government spending now in these times of crisis. Following proposals by De Grauwe, Germany and other European area creditor countries should stop austerity measures as soon as possible. Germany should increase its budget deficit to 3% to take pressure from the periphery countries. Long-term policies. We have to continue structural reforms in the periphery, which try to downsize the level of corruption, and we have to enhance government efficiency in the Mediterranean countries, Greece, Spain, Portugal, Italy. We need investment in intangible capital, education, and innovation on top priority in the Mediterranean economies. Thereafter, we need a deeper political union, a real fiscal union with more fiscal competencies being shifted to Brussels, implementation of common Eurobonds. We need a stronger coordination of wage policies and stronger harmonization of social and labor market policies to nivellate the economic imbalances. We need a commonality of destiny to be built up among Eurozone's political elites. We have got the ideal conditions. A majority of European area citizens supports the euro since 1990 and throughout the crisis. And that's it.